Right, good evening, everybody. Welcome to this evening's webinar, ACY Securities webinar, Live Forex Market Review. My name is Duncan Cooper. If you're on the live YouTube stream, I can't see the chats. You're more than welcome just to use the link I gave and come into the webinar so you can chat. Now, before we get into it, just a bit of housekeeping. Please read through the risk disclaimer. Any questions to the question box or chat box. So just read through the risk disclaimer. All right, let's move along. So if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor at ACY Securities. And I've been trading the Forex market now for more than 15 years, mentoring clients for more than 10. If you want to contact me, my email is on screen, duncan.cooper@acy.com. And through the week, you can connect with me at our website, acy.com Market News tab, our YouTube channel, ACY Securities Australia. And you can connect with me personally if you wish on Twitter and LinkedIn. As well, through the week, you can connect with me in our Telegram channel. If you'd like to get access, just contact Nathan Bray. I'll put his details in the chat a bit later or momentarily. And if you want to get access to my chart layouts and templates and indicators that I use in the webinars and in my analysis, then just contact Nathan too. As well, if you have any questions about accounts, opening an account, upgrading your account, he's the guy to talk to as well. And he is my partner in crime in the Inner Circle webinar, which we do at the start of the month. This is for account holders. If you'd like to get access, just contact Nathan and he will organize that for you. So I believe the next one is on Monday, the 5th of December. The date could change, but at the moment, I think that is where we're penciling it in. But if you speak to Nathan, he'll always update you if the date changes. But at the moment, as I understand it, it is the 5th of December. All right, I'll just put Nathan's details in the chat if you want to get hold of him. His details are going in the chat right now. All right, let's have a look at what is going on in the news first up. Tonight, we do have the US CPI data, and things to note is the market or they're forecasting an expectation that CPI year on year will actually come down this month. Whether or not it does, we will see. If it doesn't, that of course is going to drive the US dollar very strongly. So slight expectation of maybe a slight fall in inflation year on year. Okay, so it's going to be difficult to trade ahead of that because which way is the market going to go? The market at the moment, if we're just taking a rule of thumb about which way the market's going at the moment, it looks like the US dollar is getting stronger. So let's go through the levels that the market could be playing with through the next 24 hours, especially after the news event, and then you can determine what you want to do, whether it's now or later. So I'm just going to use my price action charts. We'll start with the dollar index. And this is my day chart look. I just got the weekly look. To me, this is still in an uptrend on the weekly. So it's pulling back to get support at 79% fib. This line here is a monthly level of support at 109.24. We've stabbed down in that area twice here on the weekly chart, and we're definitely getting support down there. So are we completing that pullback very, very close to the 79% level for the next movement up? And looks kind of opposite on the pairs to the US dollar, so maybe is what's happening. S&P 500. This is the day chart look. We're putting in a lower top. This hasn't been going up in terms of its rally. It hasn't been going up as strongly as some other things like, for example, gold. And it's already formed a lower top. At the moment, had quite a sell-off yesterday. So maybe we're just continuing down in a downtrend here on the indices, and we're seeing a positive play once more on the dollar index, okay? All right, so I might just talk about pound dollar first of all. I put in our Telegram today an area to watch, 11400, 11409. That is monthly resistance, and we closed below it yesterday. So let's just run through for those that aren't in Telegram. I'm looking at this major range here from my weekly range. We're kind of playing at the 62% level here, 115.31. Yesterday, we were above 114.96 weekly resistance or support. We were above 114.09 monthly support or resistance here. And clearly the market's wanting to move back below those levels. So those levels are acting as resistance once more. And we closed on the day chart back below 114.09. So it's looking a little bit bearish. It's also put in now a lower top. So if there was a question of we are making high tops and bottoms and is this moving up beyond this high, at the moment now it's showing you a lower top. So I'm anticipating we're going to be moving down in line with that newly formed trend. And if I just get rid of that fib, within the day chart structure here, we've had about a 79% failure up here on 15.38. Okay, so have we had a 79% failure? For a move down, that 4-hour chart is now in a downtrend. Today's trading doesn't really want to spend too much time back above that monthly resistance level. So have we now maybe made a decision to be below that level? As the news comes out today, high level to watch would be up at the 114.96 to 115 level. That also lines up with a 62% level of Tuesday's high to low on Wednesday. There's a 62% level there. It could get fractionally higher if it really wanted to. There is a little bit of an imbalance here that, you know, needs some filling. So it could actually get up, maybe up to the 1520 level to fill that imbalance. Okay. So that's what I'm seeing on the pound. At the moment, though, you can see under normal trading, where we don't have the volatility of a news item coming out, quite clearly 114.09 is being respected. And let's have a look at the pound yen. Today chart, you're going to see that we put in a lower top at resistance. I called that on the weekend. I said price might come up to that level of monthly weekly resistance to hold. And we've been moving down. It's now playing with weekly support here at 166.33. So can it break down below weekly day support here to put in a lower bottom on the day chart? It's really not the best time to be getting in. You should have been getting in on the failure. There's always a good time to get in. The best time to get in to maximize your risk reward profit potential. So that was early in the week up here. Now we could spike back up to that level and see a retest and hold. But at the moment, I don't think there's anything to do ahead of the news. You should avoid being short if you're getting short, and then you can have your trade at break even, and then you're waiting to see if this wants to push down and through further south. Okay. So not too much to comment on there other than day trend is breaking down to the downside. The 4-hour trend is clearly down as well. You could monitor through the news and beyond the news. There is a 4-hour downtrend structure here that you could be looking to sell a rally at 62 or 79 failure. Okay, so 4-hour structure is down, day structure is down. Watch maybe for a 4-hour rally after the news if it gives. There is a bit of an imbalance in here. Drop to the 15-minute chart. There is a bit of an imbalance in this area here. Hasn't been completely filled, and you can see how you have support, and then we drop below support, and it creates that imbalance there. So we could come back up to the area of broken support where the imbalance formed later in the day. Okay. So look at the euro dollar. Now this is back below parity. So Was that a false move that we had this week above parity? I'm still using September's range here because we haven't taken out September's high, but we have taken out October's high, which was an inside month. We kind of false broke the top just there. So as the major range, I'm using September's candle, monthly candle range. So are we kind of double topping up here at the 79% level of the bigger range to move down through the course of the month and into December? All right. To me, this looks, I'm just going to get rid of that fib. To me, we can call this a double top. We have broken the lower yesterday as well. So unless the news destroys this potential pattern, then this could be a double top. This could see us move, the 200% level. If that is a double top, the 200% marker is below support down at 93.66. So there's a double top forming there. I like to be in by the 79% level if it's a double top. So, after the news, if you think you have a double top pattern there, try to get in at a good price where you can maximize your risk to reward. Price might drop 100 pips when the news comes out, so you might not have the opportunity. So you'll just have to work out, do you want to get in before the news because you like the pattern and you're prepared to trade that risk, or are you just going to wait and so see what happens after the news? So potentially there's a double top forming. Four-hour trend is clearly down, so you just have to wait to see what the news does. This could come back up. We don't know what the news will be. It might not be that volatile when the news comes out because it might meet expectations. It might bounce up a bit. But does it start to hold maybe at the 79% level? Does it start to want to deal back below the figure? All right, of course, if this could rally all the way back up at or close to the highs up here and then hold, and then you could maybe be looking for a further retest and failure up here to decline back down. Edwin, you're saying you got in the euro at 100.50 and my stop is at 101.50. Had a trend line break and a retest on the 15. Okay, so you got your stop above the trouble at the top. So, that all sounds good. Hopefully just, drops when the news comes out and life's good. All right, so that's euro dollar, euro yen. Best levels to trade. I was looking for, this could still come up to this area that I've highlighted. I might change my highlight to that fib level there. And the figure, see what price does later in the day. So on the day chart, we're rather range bound. I covered this today in the Telegram. Resistance, support. Okay, clear range there. I have drawn a fib because we moved down to a lower bottom from that bottom. And hopefully you can see that we're failing at the 79% level. So are we failing there for a movement down to test support? And can we break through to the 127 extension? All right, so are we forming a lower top at 79 to go lower? So it would have been nice if you thought that was happening, that you maybe already got short at the 79% level, 146.95 or around about the 147 level. On the 4-hour, it's rather consolidatory. Now, I have done a presentation on liquidity. And what I did notice is we do have some form of consolidation range here. And I could draw it in. There's the top of the range, kind of coming down to the bottom of the range at the moment. All right, just drawing in roughly. So we have a little 4-hour consolidation range in the larger daily chart consolidation range. What I noticed though up here though, bit of a liquidity trap. All right, bit of buy side liquidity there in that these are where the retail buy orders are. Retail traders have been selling, for example. They got the stops just above. We came above yesterday, so there was a trip those buys. to clear out their sells. And also some would have gone and bought thinking that this is moving up. However, clearly we false broke down the 4-hour. So that to me just looks like that's where all the big sellers are waiting just to take some of those buy orders. And they're playing at the 79% level of the bigger range. Is that's what's happening up here to move down? So, you know, if you're wise, you could have maybe been looking up at that area at the time when you saw that, you know, when it came up and spiked and then closed back below the level. See the next candle trades up, just fractionally short. Right there was where you know, if you're wise about this being a liquidity trap, this is where you should have been looking to sell, right there. Okay, or at the 79% level right here, because now, you know, it's the best part of 100 pips down the track, and you could be risk-free and seeing, you know, what tonight will bring. Now, price may come back up here again, so watch this level once more. It's quite clearly resistance. We could get a volatility spike up when the news comes out, and then hold once more. All right, ultimately at the moment it is in a 4-hour range. Might just stay in that range for a bit longer. But if you know, day chart trend is more to the downside within the range, so consolidation to the downside I would favor. But I don't like to sell at the bottom of the base of consolidation, so I would look to be selling up at the top if it could present. All right, get on to the Aussie yen. This is looking very similar. See the range, resistance, supports, 79% lower top forming here. And are we going to be able to trade through support, maybe to the lower levels of weekly support down here? Okay, really should have gotten in by now. Most opportune time was up at the 94, 99, 79% fib in the 95 level. All right, on the 4-hour chart, we get the same sort of price action up here. You can start to see this. There's a 79% level. We had a triple top here, we had a bit of a spike through, and then we closed at the highs. You know, the more you keep seeing price action like this, the more you should be starting to think this is a false move above those highs. I need to sell it because we're reversing at 79% level. Okay, and clearly we've started to move down. Now, this might be a bit overextended in the short term, but I'm looking from this point of view that we're failing. We've had that move down. We're failing at 79% level to move down like so. All right. How do we get in? Just have to wait and see what price does with the news. There is a 4-hour downtrend here. So you could be looking at 62, 79% levels of that 4-hour range. That 79% level just there overlaps nicely with a pivot. I can get my rectangle to work just here. And there's been a bit of an imbalance down here that could get filled if we do rally back up. Imbalance finishes just there. So a spike up into this area here could happen when the news comes out. Maybe though time has finished to, you know, to be a seller so high up. Well, you'll just have to monitor. So can we get a 79% retracement on the 4-hour chart after the news? That's around about 94.52. Okay. Aussie dollar starting maybe to want to break below now the 64 level. So we've had difficulty up at the 65 level. On the weekend, I said watch 65.47. That's last month's high. Would we hold and fail there? So do we have like a broad range here? You could class this as a double top. If it's a double top, first of all, we have to break out the range, but let's put a fib across that high to that high as a double top. So can we break below support? And the double top price projection would be down at 57.92. Let's call it 58. All right. Don't know whether we can move down there before Christmas, but we're definitely failing at 65.47. We didn't take too much time to get back below 65. You know, over the coming week, any further movement back up to 65, definitely watch. There's an area of resistance here on the 4-hour chart. You could see this as a head on the small time frame pattern, head, left shoulder, right shoulder. So that exact level is at 64.91. So around about the 65 level. You know, do we come back up to that level, put in the right shoulder? Might not come back up. You can watch for that. Cameron asked me, does the volume journey slow down from now till Christmas? Not until we get into maybe the week leading into Christmas. Okay. Usually everything's normal till we get close to Christmas. All right, so do we get a rally back up? Price might not offer that, but you can look for that pattern to potentially form. Today on the 4-hour structure with the lower top there, draw your fib, watch your 62.79. The 79% level doesn't line up with that. High. Let's just draw it from the top as well. 62% level overlaps with that. So what, I haven't really discussed it as a thing, but we've got what we call overlapping fibs here. 2 4-hour ranges there. So we got the 62 level and the 79% level all overlapping as well against 4-hour resistance. So that would be a great level, overlapping fibs. If price was to get up there, that's that. I'll use my right tool. That area just there. So 64.89, 64.93, left shoulder's at 64.91. You've got the figure at 6,500. That whole area there could well see a reaction back down if we were to have a strong rally up today. I would be certainly watching that area for the next failure point. All right. We've covered the euros, covered the pounds, New Zealand yen. All right, so last webinar I did was this day. I said if we get a small reversal candle, you could trade the break of the candlestick low to trade down as a signal for a reversal from this weekly resistance area. All right, if anybody listened to me, there, that was the trade, and you can see it's moving down. Harash, you're asking me, let me read it. Do I think G7 and EU decision to cap Russian oil can be long-term uptrend for oil and gold from December 5? Want me to be perfectly honest, I wouldn't have a clue. I don't really, my thought process doesn't really get into those kind of things. I don't trade oil and gold, but what you're seeing on the chart, I know on oil at the moment, well, we've got a double top, and I'm pretty sure we're not seeing any, you know, if that is what's happening, you would start to see a significant change one way or the other. And at the moment, from memory, when I last looked at oil, we had a double top forming over the last few trading days. So that's not really suggesting that oil is going to go up. And I know gold has popped up, but you just have to watch the chart. I mean, really, the chart tends to, once it hears news items, it tends to lead then. And if we're not seeing a leading movement already, probably not. So what is the chart telling you? We'll have a look at gold a little bit later. I know gold popped up the other day, but I don't know if it's really reacting to that. And I'm no economist, so I only look very basically at information that's coming out, and I'm more a chartist and analyst looking at what is the chart telling me. Sometimes the chart tells you a totally opposite thing to what, you know, fundamental information comes out. All right, so New Zealand yen, we're still in an uptrend here theoretically, but it does look like we're failing at the 79% level. This weekly resistance area. Now on the 4-hour chart, well, let's just go back to the daily. Yeah, potentially this is now moving back down to weekly support down here, 82.12 to 80.57. Okay, got weekly resistance through here, weekly support through here. On the 4-hour chart, trend has turned down. It'd be nice now that we're back below 86.21 that we don't get back above it. So what I would like to see is that any rally gets capped here. That would be the area we watch to be a seller at. I mean, it could get back up to the 79% level, 86.30. It's only 9 pips above, but really moving 10 pips through there is fine. I wouldn't want to see it moving back another 50 above there. I'd like to see this to be resistance now on any kind of form of retest. All right, so you can watch for that. So looking to sell a rally. Can it come back up and retest that weekly resistance level at 86.21? May only go back up to 8600, the figure. Okay. All right, New Zealand dollar. Let's come back up to this day chart resistance. In fact, we'll just go to the weekly chart first. And I don't think it's come up to any significant fib level. 50 level, which isn't significant for me. 62 or 79 are the ones I watch, but it is the 50 level. It has come up to a daily level of resistance. Slavia mentioned that it did feel this imbalance up through here. So, and it pretty much came to the 60 level. So a very prominent price point on the chart. We got up to about 59.99. Let me just get the exact number of that level. 59.96. All right, so we come up to a notable level of broken support. It was support here, so it was support there, and it was support here kind of for like 2 candles. And then we came underneath, all right, retested and failed, and then we came down. So it was definitely a level that got nicely used in terms of broken support, became resistance at that point. And when we come back up to it once more, it is resistance once more. Now, we could actually draw a fib from this point down. And the 79% level is close to that level. I know it's not the complete range, but I just wanted to see what was lining up there. Because this could be the failure point, the next lower top on the weekly chart here. Okay. So I'm just trying to pick out some information that might, you know, strongly suggest that. All right, now the 4-hour structure's obviously turned down. I can see very similar to what I was discussing on the Aussie dollar that this could be a left shoulder. This could be a head. And any rally there on the 4-hour chart back up to that area, 62% level lines up with that level. It's last week's high as well. So it's a very prominent resistance level. You know, do we form a head and shoulders on a rally? Now we might not rally, but if we do, watch the 62 level there, lining up with last week's high. Clearly this, you know, this is where, say all these candles were holding at last week's high, where they were wicking, not closing above. This is price coming up, filling orders to go short. because then it collapses back below. Okay, we have already had this candle here come back up to retest that area, got heavily rejected. So this is a false break of last week's high. This is the market getting pushed up to fill orders. You know, so when you see a big candle like that, and then it just completely moves back below the area of resistance that you were wicking at before, then this is just a liquidity area getting filled before moving back below. So do we come back to the same level, form that right shoulder for a movement back down? Okay, so you can watch that area. Whether it gives it or not, you'll just have to wait and see. All right, dollar Canadian. Now a false break in the area we discussed on Tuesday, the 135.02 level. It was this, like, you know, it's grabbing order, you know, price breaks. Those that have been buying, the retail traders that are buying have to sell. Then they sell as well because they want to go short. But are the larger traders underneath here just taking the other side of those trades, because we came down and we're back above the level. So we just false broke that to continue, you know, the larger trend that we're seeing up this way. All right. And this, yeah, that line there is that weekly low there. We false broke it. You know, if you finish at the end of the week with a very positive, in a very positive hammer style candle, pin bar, we could well be putting in a bottom there to move up. So after the news today, you know, what does price do? Or even after over the next few days, do we come back down to retest 35.02? Does it offer support? Last month's low is here too. So we're already false breaking last month's low here. Think about a candle of the month. Last month's low is the lowest that price was dealt at for the whole month. That's as low as anybody was prepared to, you know, sell it at before the buyers came in. So that's a very prominent level where, you know, sellers think that's a very low price. Maybe not going to engage too much below that level before price will snap back up. Plus, as well, from the buyer's perspective, it was the lowest price that they could buy it the month before. So anywhere underneath there, they're grabbing orders. If they want to be, you know, buying dollar Canadian, can I buy it at a better price than last month before it goes back up? All right. So this is why we're getting a false break of last month's low. And it would be nice if you want to trade Canadian dollar. I don't, but if you want to, this is see a bit more of an impulsive move up. Can this level of support that we false broke be support once more? You know, see like a fib retracement, 62 level maybe, or a 79, depending on how it looks when you draw your fib, for an opportunity to move up. It looks like a false break of support there, but today's news will certainly work out whether or not that's a false break of support. All right, dollar yen. This is the area of support I've been discussing over the last couple of weeks. We're moving into what is daily support along here, 144.99. Can't quite get down to that level anymore. Pretty much the 145 level. And you've got weekly support from that top at 145.89. So, you know, this week we've been down there 2 days, but we've kind of put in a reversal down there. We've been down here once, twice, 3, 4 times, and we're back above. So that should be telling you that support's coming in that area. All right, we don't have a 4-hour uptrend just yet, but once you start to see a 4-hour chart uptrend, do you see a pullback and a continuation pattern form? Okay. We may well spike back down in there today, and you might see an opportunity on the 50-minute chart to trade back a reversal back up. But quite clearly, in my mind at the moment, this looks like any movement into that area, so between, you know, 145.89 down to 144.99, clearly the market is watching that level of support. All right, and as well, I just love it. I just love these areas on the monthly candle. That's the monthly range. There's the 79% level. You know, if all you did was look at the monthly candle, where is the 79% retracement level, be it in an uptrend or a downtrend, and if all you did was just wait for price to get down there and start to see it reverse and take a trade down there, these are the high probability areas of the month where price can get support, in this case, to move all the way back up to the top of the month. All right, so if all you did was have that plan each and every month to monitor your pairs for a 79% retracement, same thing's been happening on the euro dollar. Okay. You won't go, I really feel like if you did that for 12 months, that's all you did, look for these areas to structure your trades, you would see consistency in your trading. Okay. These are the areas that I'm talking about all the time. These are the areas that I'm looking to trade at. All right. All right, so look at gold. And same conversation. Here's the day chart, but this fib is drawn across last month's trading range, last month's candle. And Slav, I said to you last night, I'm pretty sure it happened the month before. I don't know whether you went away and checked that, but I'm pretty sure. I'm going to check it right now. So that was September's high. That was September's low. Now we came up, yes, beyond the 79% level. But if you started to see it move back below that 79% level last month, we traded down. Now, last month's range was from there then to there, but I think we did dip down fractionally below. So just take it to its lowest point. Okay, we're at the 79% level of that range now. Are we failing here for another movement down? You know, whilst this is the higher level of support or resistance, the 1676 level, maybe the market's operating much more in this sort of range. Maybe it's disregarding that level in your ranges here. All right. So we might get up to 1729.50, but at the moment on the day chart, it's kind of looking like a reversal at the 79% level. So you could be looking to now structure. Do you start to see a 4-hour structure that's telling you here that we're starting to reverse? Not quite seeing that just yet. But what we might see over the coming days is that some form of price action comes up. This isn't a lower bottom per se, but this could be a left shoulder, head, right shoulder. You might kind of see price come up and fail here. And then you could start to maybe try to trade very close to that level for a sell to move down with some form of head and shoulder pattern forming there. Okay. Of course, price can blow straight through that level, but again, we're at the 79% highs, high area of the range, exactly, you know, that unfolded last month. The price just keeps doing the same thing all the time. All right. It did it last month on gold. Is it doing the same thing this month on gold? You can just watch and see whether you want to trade it. Slightly saying, you're telling me the 4-hour MACD's crossed down. Yep, it's starting to cross down. So it's showing you that the momentum is starting to wane in that area. All right. So I like to just look at price. But yes, I will do exactly the same as what you just suggested there, Slav. If I think it's stopping up there, I can move to my MACD charts and just see whether or not my 4-hour MACD's crossed down, just to show that momentum shift. So we're definitely getting a shift of momentum there in the 4-hour. The 1-hour chart momentum, it's down. You know, when we actually put in the final stab up there, you had divergence on the 1-hour chart. So it's definitely running out of momentum up there at the moment. All right, so yeah, lots of traders use MACD. Doesn't mean to say price can't move up and through, but I do the exact same thing. I just check the 4 hour, 1 hour to see what I'm seeing in that area. Or I got something else coming in on my chat. Yeah, so lots of people are, if you're using indicators that lots of people are using and you're seeing divergence, it just helps you give that warm, fuzzy feeling that, okay, everybody else might be coming up with the same decision process. Doesn't mean to say that price won't go up, but it's just one of those things that you can tick off to say, okay, it's just one more positive thing that's telling me that I should be going short here. Harash, let me just read what you're saying. All right, so you're saying, as per your experience over the years, there is a theory put in that in the third year and US midterm election, usually opposition wins and second day SPY and Dow Jones usually move up. And since opposition is in majority and president is not signing any bills, there is I think you're saying stalemate, and all indices and dollar rally, and all indices in US dollar rally as there is no intervention by government. I don't know. I don't know anything about that. So I couldn't give you a yes or no. I don't get into all that hocus pocus theory. I just look at the price chart. Now, if you can, that theory, if you can look at the chart back in time when all those things occurred and that truly unfolds, well, of course, apply it and trade it. But I couldn't confirm it or deny it. So can't help you with that. And then you're asking me, is there any such pattern seen by you on currencies? All right, in reference to your other big long question, well, I don't follow the statement in your first question, so I can't really confirm, is there a pattern in the currency market relative to that theory? So I can't help you there. And that was a view of Bank of America and Morgan Stanley head analyst. Well, I don't know if he's a good analyst or not. So I can't really confirm that. The only analyst that I trade by is myself. So I don't know what Bank of America is saying and what their viewpoint is on the currencies at the moment. All I can tell you at the moment is that the US dollar is getting stronger since. I don't know if have we had an ultimatum in terms of the election result. I did see on the news maybe that Biden and his crew have gotten the appropriate votes, but I don't know whether he's got the majority or not, so he can put things through. So I can't even confirm for you that he has control. But whatever the result is, if it's the final result yet, or let's just go to CNBC, or they're still deliberating as to whether we have a final result. We will, at the moment, clearly the US dollar is getting stronger. Midterm election updates, Biden says a predicted Republican wave didn't happen. So it kind of looks like he's going to get the result that he wants. Whether or not he gets a strong enough result that means he can pass bills and such like through the House, I don't know. But what we're definitely seeing at the moment is, let's just go back to my dollar index. Day chart here. Positivity yesterday and into today. Now, of course, that can change when we have the CPI data later in the day, but kind of looking like we're getting US dollar strength to move back up at the moment. Harash asked me, can I please share news links that I follow and that we should look at, please? The bookmarks that you look at, I'll look at, so I'll put them in the chat. And I'm going to be perfectly honest, I don't spend too much time at all looking at the news. I just look at the headlines. I'm aware of the news items that are coming out for the week. I will go to cnbc.com just to look at the headlines, but they are fairly delayed. So that's that link. I do look at Forex Factory for the news coming out for the week. I do look at these headlines that come in a lot quicker than CNBC. I just look at them and see what they say. I look at what source it's coming from. If it's a source that I don't really know anything about, I don't give any weight to it. So I do look at these headlines coming out. If it's a headline from the central bank, often the RBA post will show here. That's fine. If it's from a source that I have no idea the validity of the source, then I just look at the headlines just to see what the headlines are saying. So this is forexfactory.com. All right, so there's another one. All right, so I've just put both of those links in the chat for whoever wants them. cnbc.com and forexfactory.com. All right, those are just two sources I use. You can go pay for, up to the minute sources if you want to, but I don't do that. So I'm very much aware. If I look at the forexfactory.com and look at the news red items coming out for the week, these are the ones that I focus on and make sure that I'm not going to get destroyed by a news item coming out, generally speaking. And I will look at some headlines coming out if they're talking about those headline news events coming out, but I don't get too much involved. I don't spend like 2 hours a day reading news and all that carry on. All right. I don't do that at all. Because what I tend to find is that all these people writing articles and news items, it's just to get you to click on their link to go to that website. It doesn't mean to say that they know what they're talking about, that what they're saying is going to help you one iota in terms of your trading. So you've got to make sure it's coming from a very reputable source. It's just not like clickbait linking so that you go to their website. All right. So I've never found the need to go and pay for a news source for myself to be able to make money trading in the currency market. So each to their own. I don't want to poo-poo anybody else who might be, but those are the two websites I use, and they've held me in enough good stead to keep me on the right side of the ledger, especially through the times where I need to know a bit about what's going on in the news. All right. All right, let's just go back to the charts. I can see, just to wrap up, we've got this CPI data coming out. I can see that, euro dollar, it's moving down the chart. I did get short the euro dollar the other day, just above parity. So the further that drops down before the news event, the better. As I said, these 79% levels of the monthly range, I was using September's range because October's range was within inside September. All right. And Edwin, you said you got short at 100.50, so you're pretty much short at 79 level. I got short as price was coming up here, thinking that the figure would hold. Almost stopped me out. Didn't quite. I got a little bit lucky. So it's always nice to get a little bit lucky, because at times you're going to get unlucky. So it all kind of evens itself out. As I was saying last night, if you're trading the same way all the time, you're going to have times when you get lucky. You're going to have times when you get unlucky, but it all kind of evens itself out if you're trading to a regimental approach. And hopefully you're seeing, as you're attending my webinars over the last few months, if you're new, I'm doing the same thing all the time. All right, that's the monthly candle of September. October was an inside candle. And if I open up a new chart, I said this at the beginning of the month, we may break the highs of last month. and false break. I'm just saying that now just to make myself look good. I just said it because we're in a definite dominant downtrend. Okay, here's the euro dollars, the plain chart. Let me just get it up as a plain chart. Monthly chart. We're in a clear dominant downtrend here on the monthly chart. If you look at these monthly candles, we see this one here. We just broke above the previous month before false breaking and collapsing down. All right, this monthly candle here almost equaled the high of the previous month, and then we dropped down 4 months. We had an inside month on October. That's why I've been using September's range. And we just traded above October's high, and we're kind of false breaking it as we get into the day chart. All right. Same thing's happening on the Aussie. Here's your monthly chart. See how we just got above last month? Is that all we can do this month before we trade all the way back down? And Cameron, you're saying the pound. I don't think the pound's had a month up though this month. It can't even get up above the high of the month. All right. We can't, last month was positive, but we couldn't get above the month before. This month, we can't get above the month before either. So we've been up to the higher levels of the heights of the month. So if you can just get it into your head that if we're in a clear downtrend, when we're getting up to the higher reaches of the month, that's where people want to sell. Close to the highest prices of the previous month. Yeah. So if you can just think logically, you know, there's the high of last month. Now, usually you would draw it from the, you know, this way from low to high, but maybe we, you know, are now coming down. So you could go from the high last month to this day chart low. And then you're seeing that we're failing at this 79% level. You could draw it across the whole range backward way around so that you're looking at, okay, if you have the frame of mind that we can't take out the high last month, and I want to sell up high within the range of last month for another movement down this month, then drawing the fib the backwards way around here, there's a 79% level. This is the whole area here where you're going to be at the highest price of last month to maybe trade down to the low level of last month. So this area here is where you have to be on your toes. All right. All right, I think we started, November started around about here. Let me just double check. All right, so this is November's trading. All right. But even in the latter end of October, if you felt that this was the high of the month and maybe we weren't going to take it out next month, you could have been looking to trade up here. But that being said, that might be a bit of a stretch, but you know, up through here where we failed pretty much at the 116 level over the last couple of trading days, this is the all the way up to there. That's where you should be looking to structure a trade to the downside, because that's this is the highest area where price could get to. This is where there's no oxygen. There's no oxygen up there for the buyers last month. So is there any oxygen up there this month for the buyers? All right. And clearly they're struggling up there. The buyers can't breathe up there. So that's where you should be looking to sell this month. Very close, as high up as you can get toward the monthly high. All right. So we might revisit that area once more, but maybe things have already finished up there and we're moving down now to challenge last month's low. All right. So hopefully you're getting across that philosophy. I'm just doing that every month. I'm looking at where's the highest point that I could be, if it's in a downtrend generally on the monthly chart, where's the highest point that I could be trading at this month to get positioned for a movement back down, maybe to test last month's low. All right. And that opportunity in the month isn't going to be happening every trading day of the month. There's going to be maybe 3 or 4 days in the month where you might get that opportunity. This opportunity on the Aussie, go and have a look at the Aussie. Or let me just use this same chart, but just get rid of all that rubbish. You know, you didn't have much opportunity. If we have topped out for the month on the Aussie, you haven't had much opportunity to do it. You needed to be ready when we came up to the high of the month. All right, because the high of the month is here. And at the start of the month, when I was reviewing what happened last month, where we failed up here at this area of consolidation, I'm pretty sure I said, you know, you should be watching this area of consolidation if we come back to it. Well, we came back to it here, where we tested last month's high. We couldn't hold. It's been down ever since. Now, we might come back up for a retest, but you may have already missed the boat. You know, so you have to have these levels on your chart. And I've got this indicator that tells you where last month's high is, where last month's low is. All right. I've been trading up here with a 100 pip stop. You're already risk-free. Now you're just waiting to see it's going to move down to the low. Plus, as well, as I said, there's a double top potentially forming. You could have sold that up there. And now you could be holding it for the next 4 weeks to 8 weeks to see when it moves down to the 58 level. You know, selling it at 50, let's say selling it at 65, taking it off at 58, that's 700 pips. All right. That's how you structure long-term trades with good risk to reward. You know, even if you didn't sell it right at the top, but you sold it at 65, 100 pip stop, targeting down to 58 at the moment, that's risk reward of 1 to 7. And you may have structured it even better in terms of risk reward than what I'm discussing. But you have to start to watch these levels, because hopefully you can start to see that these levels are where price will reverse back up or down from. It's like on the dollar Canadian. Dollar Canadian, we're false breaking last month's low. Last month's lows here. 134.95 is last month's low. All right. That's where, if you think the long-term trend on the dollar Canadian is up, buying at the lowest price of last month is the perfect level to be buying at, isn't it? All right. So, you know, think about what I'm saying there. Where's the best place to buy in the month or sell in the month? Buying at last month's low or selling at last month's high, or at the 7-9% areas of those ranges. Okay. All right. So we are definitely seeing, as I wind up, you know, Aussie's still pretty much at the low of the day. So is the Aussie yen. Euro yen starting to break below consolidation. Tony, are you still short the euro yen? Yep. Okay. Well, hopefully we don't get a spike up. I'm not sure. I was talking to Nathan the other day. I'm pretty sure he got short very close to 147. I'm not short because I'm in short something else, but it's breaking. Looks like it's maybe just starting to break down from that consolidation. So hopefully the news is positive for the short side. We'll see what happens. I'll be awake at that time. For me, it's only 11:30. I know for if you're in New South Wales somewhere, it's like 12:30. So that's painful, but that's trading, isn't it? All right, so that's obviously going down. Euro dollars heading downwards. It's down now at 99.65. Pound dollar is wanting to hold below. We do have GDP figures coming out for the pound, so maybe this is getting a little bit of support, but it is holding below 114.09. Now, I've got GDP figures coming out tomorrow for the pound. We could still spike up tomorrow, back up to maybe the 115 level, depending on what that news brings. So have your levels on your charts. All right. All right, everybody, heads up for next week. Thanks very much for attending with me this week. Webinars next week. Tuesday will be live market analysis. Wednesday will be based around what I talked about last night about, you know, having a strategy that you trade, rules-based, testing it over 20 trades, 40 trades, 60 trades, doing the exact same thing. All right, being a professional about what you're doing. Next 3 webinars in the month, I'm going to go through support and resistance and take you through a very simple trading strategy that you could do that on. Week after that, we're going to go through a pivot point strategy, which you could use, do the same thing. And I'm also doing a figure strategy. So next week, Tuesday's analysis, Wednesday support and resistance trading, Thursday's analysis. That's what's coming up over the next week. So if you've got the time, look forward to seeing you then. Cameron, you're asking me on EJ, there is a huge imbalance higher up and a big OB on the month. What's an OB? Order block. Let me just have a look at that before we finish. Let me just. What are we saying? Euro yen, aren't we? Let me just get a fresh chart up. You're saying on the EJ, there is a huge imbalance higher up. What or on the monthly chart? What time frame are you looking at your imbalance? I can see an order block on the monthly chart, which is there, which we're kind of in. Back in 2007, you're saying this, the imbalance in 2007? Yeah, there's an imbalance through there. I would say with the monthly chart, this imbalance. I might not have data on the day chart. It all depends when you're looking at that imbalance on the monthly chart. For me, that imbalance would depend on what had occurred through the month. So if you say drop dead, if you could see, let's have a look at the weekly charts. So on the weekly chart here, we've had some movement back up, but there is still a bit of, you know, if I refine it on the weekly chart, there's an imbalance there that hasn't been filled, but I wouldn't hang my hat on that imbalance getting filled if the trend on the euro is starting to trend down. All right, because there's an imbalance here. Oh, well, that's where price is. So this imbalance here has been filled because that grey line's where price is. So that imbalance has gotten filled. And what I can see in terms of this price action here, you know, we had a bit of an imbalance, you know, we had a bit of a drop, pretty sure if you go to the 4-hour charts. All those imbalances on that time frame's been filled. All the imbalances here have been filled in the most recent price action. I mean, we could go higher, but it's going to take a while to fill that. You know, if you think you were going to go up and fill that higher imbalance that you're talking about way back in 2007, that's a long way away. It's going to take a while to get up to there. So I don't know whether price is thinking about that at the moment. I'm more just thinking about if we, you know, as long as that level 144.26-ish area, my dog's barking, as long as that area holds, yes, there's every opportunity if we come back down and test that level. If support holds, we could keep moving up. But in the short term, a lower top's forming here. If we move below 144, any upside potential at the moment kind of for me is off the table. But if 144 holds, there's still that opportunity maybe that we are moving higher up, maybe into next year. Maybe we'll have to wait and see, won't we? All right, let's finish it on that note. Thanks very much. Thanks, everybody. Have a great weekend. Thanks for turning out with me this week. Wherever you are, stay safe, and look forward to seeing you next time. Thanks, everybody.